It's Brian Miller. I'm from Equity Sciences and Optimized Trading. I'm the head of research, and pleasure being with you today. Thanks for David for the opportunity to speak. So, after some time, you know, um, my business partner and I, how this new product, really came to be was we wanted something to use for, that was directly impactful of our own personal trading, more along the lines of discretionary trading. But, whenever you look across the product tree, the product universe, if you will, in discretionary tools, research, analytics, etc., there's some, uh, i- i- you know, n- I guess you could say, negative commonalities. One, the primarily being subjectivity, right? Limited application versatility, uh, a limited integration. And so we wanted to create something for ourselves that, we could apply to any market that would, that would have a very high, application versatility, no matter what our position holds no matter what frequency it was that we were pursuing, no matter what type of underlying strategic concept or market, etc. And so that came to be with what's called Pi, Peak Insight Engine, right? And it's very, very simple. It simply outputs what you see is simply just a basic percentage, and then it has a couple of averages attached to that. And essentially, what Pi does is it uses a form or a structure that we've integrated into our quantitative models for a very long time. I have integrated into them for well over a decade now, called market classification. And so we use some very basic market classification, and that is unique to each primary frequency that you see on the screen. You'll see a 60-minute, a 1440-minute, which is essentially a daily, and then a weekly. And but before I dive in, I do want to read the disclaimer, before we dive into details. So historical performance, whether live or simulated, may not be indicative of future results. Trading carries a high risk degree of loss, which may not be suitable for all investors. Investors should only choose to invest funds they can afford to lose without negatively affecting lifestyle. We do not guarantee nor claim our strategies or products will perform positively and or reflect our historical results. In fact, there can be a significant difference between historical and live results. Please consult your investment professional before choosing any strategy or trading product to ensure it meets your investment objectives and risk tolerances. Everything shown is for educational research purposes only, and all data shown is not live, real. It's simulated with inherent limitations. All right, that's it. All right. So what Pi is, a Peak Insight Engine is, essentially we incorporate a structure called market classification, where we break the market down into repetitive market conditions, right? Or regimes, I guess you could say. And some regimes are more dominant than others. Some last a longer percentage of time. Some are more frequent but don't last quite as long. And it really depends on how you choose to classify the market. And within these, analysis tools, we give a very wide array of different choices and how you want to classify different analytics that you want to apply, different look back links, right? And definitely focused on different perspectives of analysis, so you can gain a more full picture of overall price characteristics. And so essentially, let's take right in the middle, for instance, the 1440. We break that down into 64 classifications. The weekly, we break that down into 32 classifications. And the 60-minute, we break that down into 128 classifications. And the reason why we go 128 on the intraday, and technically, even though that I show 60-minute 1440 and weekly. The intraday you can go anywhere from, you can apply this anywhere from a 15-minute bar all the way up to, let's say maybe like 120, 135, 180-minute bar. So that product is tuned to be, to serve a kind of wide array, because there's a lot of paths that you can pursue as a trader investor on an intraday basis. Especially variations of value that you may choose to exploit, no matter what type of strategic concept or philosophy or methodology that you may want to deploy, whether it's trending, methodology, causal, event, economic reports, it doesn't matter. So we wanted to, ensure that we had enough classifications to see things not only from multiple perspectives, but multiple frequencies as well. And so using market classification, we break the market down into 128, 64, or 32 repetitive conditions or regimes, right? And at any point in time, for that frequency, for that time series, the price, that asset will be within one of those 32, 64, or 128 classifications. So, and then what the pie model does is it tracks every bar, essentially, every bar that has occurred um, in each classification. So it starts creating these characteristic profiles. And essentially, the pi, this variant of pi, and we have other research tools, that we'll be offering as well, but this is the primary product. Pi essentially, just all it does is it gives you the probability or percentage that the price will close greater than it's open for bullish or less than it's open for bearish, right? And so essentially what it's done is throughout the start of the chart, right? So you go back 30 years of data, or however much data that you have, 20 years, 15 years, 10 years, whatever. The most amount, the better. And essentially what it does is it just compounds it counts essentially to identify the percentage of time when that classification has occurred throughout history, the percentage of time that it's either closed greater than it's open or less than it's open, right? And so, um, which is, very useful information no matter what type of strategic concept that you may be deploying. If you know the percentage of time, like in the current, whatever the current market condition is, if hey, today, or it's showing me that there's a 82% or 78%, and now I'm seeing that across multiple frequencies as well. So there's so many different ways to integrate this. While that is the subjective part, right? The application versatility is the only subjective part, really. But uh, the impact of the impact and simplicity of the information that it gives you, it is quite objective, right? So it essentially just outputs a percentage, right? And so for bullish, it's counting, the percentage of time it's closing greater than its open price. And for bearish, it's counting the percentage, it's showing the percentage of time that it's closing less than its open price. So there is, practically endless, applications for this to integrate it into an existing strategic concept, to create new strategies around it, additional confirmation tools for existing, and then especially when you start stacking frequencies, like the deliverable that we deliver to you is when you purchase the product from us, you get the models, right? You get the indicators, right? For each frequency, you get one for weekly, one for daily, and one for intraday. And then you'll also receive one workspace. Now, one workspace is already tuned, right? So we have tuned it in a general format, right? So we have not tuned it for any specific strategy or or methodology, anything like that. We just kind of, ran a test and seen, hey, this kind of fits, within a well range of different strategies and concepts. And this is what we kind of feel is kind of a balanced approach. And so what we've done, the difference between this product and others is these are delivered with a model, right? And so you can actually test um, what different values, what different classifications maybe you want to just plain and simply just activate or deactivate, and then also what your logic would be, your thresholds, right? Well, you don't know. Do you want just a general threshold, right? So, for instance, on daily, if the daily bullish is greater than 60%, well, is that 60% in every environment? So you're just going to take a flat 60% no matter which classification it's in. Or you can also test classification specific thresholds, right? So you can say, well, in classification 64, maybe I want it to be greater than 82%. Well, in classification 30, maybe it'll be greater than, 55% or 60%, right? So you can test 1 through 64 classifications on the thresholds, the threshold levels that are best for each classification. So that way you have something that's relative to the current market condition that those price characteristics are currently exuding. And so that is what separates this, is that you can test how you are actually integrating this into a process that's already existed, or if you are creating something new that's built upon it or around it. And so the model that accompanies each of these very basic indicators is kind of what separates, this from other products, that the other research and analytic tools, because it helps, again, eliminating subjectivity, which is, I think, is a critical factor in most, analytic and research and indicator, type of products that are you typically find available. But um, so, one very general example of this would be, so let's say that you don't really know how you want to classify the market. Well, then, when you purchase the product, we'll deliver a very detailed how-to video. And essentially what that will give you, is, how to apply we when you purchase the product, we'll give you a workspace and that's already pre-tuned. But for those who kind of want to go a little deeper, right? Maybe you want to apply it to a different market, or you want to customize it yourself, or you want to, play around with it. Also offer an how-to video that will show you how to apply it, how to change the classification inputs, what each different input number changes it to, right? So you're not just, working in the blind. And then also how to apply and test the model. And so, which is quite simple. Now, there's a lot of inputs there, but there has to be, for specificity purposes. But again, the video is quite simple, and then so we deliver that to you. You download it, and you can watch it, however many times that you need to for familiarity purposes. But one difference here. Let me show you. Let me activate the model. So this is the uh, one of the now the difference between momentum and reverting is we essentially flip it. So I'll the momentum version of this is, well, you're counting it up. Well, then the other is the bullish reverting is essentially I use the calculation for the bearish. Um, and so it shifts the perspective. So it really you essentially come off with two long models and two short models per classification per frequency. So if you activate this, and this only uses everything that's available in this indicator. That's it, other than one basic price movement condition, which is like, is close greater than open, or is like, low greater than yesterday's low. Very, very, very basic price movement condition. And that is to kind of lean the market. Either do you want more of a momentum type of, do you want to go with movement type of model, or do you want to kind of go against it type of model? You can deactivate that as well. So every condition that's included. You can deactivate it. Secondary condition that may use the averages that we include here. So are they increasing? Are they decreasing? Are they above certain values, below certain values, right? So everything that's in this model is summed up in one indicator. That's it, right? You'll not find any other analytic, any other research tool, any other you know nothing, no other data sets. So everything is right here. And with that being said, here is a general very general example, simulated example of that. So here is open equity. So you can see the open deviations between the open position deviation, right? And here is position close, right? Which is, pretty substantial, outcome, for, a larger bar size, and not only that, but you get really healthy uh, you know, trade frequency, and that is such a key a key aspect that a lot of quant strategists, etc., may not discuss with you. But data points are a critical factor in reducing your overfitting risks. They're a critical factor for your response efficiency, right? How quickly can you identify if a model is, or if a strategy is truly acting out of characteristics, right? Or is it aligned? You don't sometimes with some like trending concepts that have very irregular trading frequency on a per asset basis. um, if it's only trading 60 times over the past 30 years or so, if it gets two trades wrong in a row, um, and some of those concepts can have quite substantial drawdowns. Is that just is that normal? It can be very challenging to identify, model characteristics, when the trade frequency, when your data points are so erratic, right, and irregular. So, you want healthy trade frequency, no matter what frequency it is that you're trading, right? And another reason for that is trade frequency, especially when you start exploring strategies where your accuracy is greater than 70%. It really helps significantly improve the compounding rate, right? Because now you can compound each time that you take another trade, right? And you can choose how much you want to compound, right? And you can even base how much you want to compound off of market classification eventually, or whatever methodology it is that you wanted to deploy, right? So this immediately compounds. This is a it's a very basic money management. It starts with 100K, and it uses initial investment plus net profit divided by close, and it follows the indicator. Everything that's available in the indicators is within this model structure. And so now how I found that is best is to not come at it with any predetermined notions of how it might be best to use, right? And, the human brain can often think, well, I think, an 80% threshold would be great. Well, it may not be great. It could be, maybe it's 85%, or maybe it's 78%. You don't know. And so the joy here, the again, the differentiating factor is you can use the model with very basic exit logic, right? We didn't include, super, highly adaptive exit logic. That's not the objective. The objective here is to source, efficient entry setups, right? Entry logic, entry conditions, entry criteria, or filtering methodologies, right? Things that increase your that directly impact, your probability of positive outcome. And that is the goal. When we designed these products, it wasn't for public use. It was not for it, the initial intent when I, went down this, um, you know, when I went down this kind of idea rabbit hole. It wasn't for public use. This was something that I was designing for me personally, right? And then, I started discussing it with Rob, my business partner. And he's like, "Wow, that actually sounds like, a fantastic thing. Do you think you could, whip something up for the business?" And so I did. So this actually started out as something, that I was going to personally use in my own personal trading. And so it's highly impactful, to know the probability of, price going. Now, it doesn't tell you distance, right? So you don't know, well, how far is it going to go? Well, we have other analytics for that, right? We have another group of research tools and analytics that can tell you price distance, right? Volatility, directional pressures, right? So using this, you can even use the same classification methods that you're using for your model, or for pi, in with those other forms of analytics to give you, again, more information. So you can look at that and say, well, in this classification, I know upward movement, whenever price, closes greater than its open. I know that it goes up an average of, historically speaking, I know it goes up, 10.5 points, or, 8.5 points, or whatever it might be, right? And so, and then likewise for shorts, right? So, how much is it going to close down? So everything is, classification specific. Everything is direction specific, right? And the only thing that's kind of broad and general is application, right? So what type of strategy do you want to integrate this into? Is it a trending strategy, a momentum strategy, um, you know, uh, more reverting, value, cyclical, seasonal, ARB, uh, pattern, right? It doesn't matter, right? You can the information that it offers is so simple but so effective that it can be integrated into any process, to directly improve, its result, either through a secondary confirmation and or as the one of the primary levers, if you will. And so, you can see here that, the histogram part is the daily pie, the daily output, the daily percentage output. The two other lines are moving averages, and again, you can change all of that. Here's the inputs, right? And so, once you purchase the product, we actually show you what all of these inputs are, what they, if you change this to 5, what are you changing that to, right? Now, we deliver this with closed code. You can't open up the code, but we do show you what the input values are, what the variables are, what the calculations and analytics are. Okay, we just don't show you um, the structure of everything. So, um, but again, you really don't need that. So, it's a very effective tool, no matter if it's in a, systematic, you know, trading application or discretionary. And the fruit here is how you can use this, e- even if you don't want to use any other strategy, you just want to use this, think about when you start compounding these outputs, right? So not only do I want, this signal to be aligned, but I want these to be above maybe a general threshold. Maybe I want weekly above, 60%. I want daily above its classification specific threshold. And then, so when you start compounding these outputs, right? Not only that, and then let's say you want, your shorts to be less than a certain percent because you don't want confliction, right? So because you can classify the market differently between your long and your short, or your bullish and your bearish, right? You can sometimes get, conflictions here. Like sometimes this might be above 50% and this will be above 50% too, right? And so what you want is alignment across the board, right? And then you can apply to different markets, and that's another product line. So whenever you purchase the product, we deliver SPY workspace to you. And again, that's already preset. So for people who want a plug and play solution, it's already tuned, if you will. The models that are attached to the screens, again, those are just a guide, okay? Um, and the input selections for the analytics, for the indicators, those are already preset, okay? So those are delivered to you in the SPY workspace, okay? Now, over time, we're going to be offering, a whole host of pre-tuned plug and play workspaces. Basically, every liquid market. So crypto, crude, every index, futures, bonds, gold, Euro, FX, Netflix, Nvidia, Facebook, every large cap stock, every sector and index ETF, every liquid futures contracts, most common FX pairs. So we're going to offer these workspaces that can be purchased as a separate product. And the first 100 customers, we're offering a $200 discount to the first 100 customers, and then in addition to that, we'll be giving the first 100, I believe it's either a 30 or 35% discount on additional workspaces. So if you want more plug and play solutions, more plug and play workspaces, if you want another market, maybe you want SPY and ES or MES, NASDAQ, QQQ, you want all the indexes, another 30 or 35% discount on additional workspace purchases, I think up to 5 or so. So, um, and then for the people that, want to, and that could be the case for most people initially, but over time, as you become more familiar and more comfortable with the analytics, you may want to, tune it to your liking, right? And so, over time, you may feel more comfortable just to plug and play solutions, and then maybe down the line, you may want to say, well, I want to change this on the model. I want to change this classification. Let's test it, right? Let's run a test and see if this works a little better, right? And that's the difference. You can test your ideas, right? How you want to integrate it, what you want to use as your conditional logic, what do you want to use as your thresholds, what value you want to extract from it, right? Um, and so, and again, that's the case across all three frequencies. So we give you an intraday. So no matter which, what your position holds are, like a lot of discretionary traders, most of the successful ones, we really don't focus on a specific frequency. We're focused on efficiency and types of value, right? So, for this market, we might be, it might kind of be like a longer term swing position where we're holding the position for like 10 days, right? Whereas this position over here, maybe it's an intraday, and we'll be closing by session end. And maybe this market over here, it's an intraday, and we're only going to be in this position for 15 or 20 minutes, right? So it's a very broad mix, right? And because of that, we've essentially offered, within the model as well, that you can test each frequency depending on, do you want to exit? Do you want to automatically exit after a certain number of bars, like 1 bar, right? 5 bar, 1 week, 2 weeks, 3 weeks, a month, right? So, you can create the very simple, you can activate anyway, very simple exit logic to test, to go along with any ideas that you may have and how you want to use pi, right? And how you want to use the classification. Whether you just want to see which classifications offer a positive effect, right? And that's another tool, that another perspective. Maybe you not necessarily using the percentage output, but you just want to see out of the classifications which offer, a bullish, a positive bullish probability, and out of those which offer a positive bearish probability, and then use that to integrate into any current idea or strategy that you may have. Again, the application versatility is practically endless, right? It's only up to your own imagination and how you want, and that's really the only subjective part to it, and how you want to use it, right? But we really wanted to create something that was very, very simple. Its output was very, very simple. um, and while it was detailed in its approach, and simple in its approach, it was also highly adaptive, right? So it's not like, well, it's only identifying this type of value, or it's only showing you this type of alpha source, or signal in this type of environment, right? So we wanted to construct something that would deliver valuable information in every market environment and substructure, or most of them anyway. All right. And how we program that again is for intraday, it's 128 classifications. Again, multiple frequency, you need kind of multiple perspectives of view, right? Not just multiple analytics, but larger look back periods, right? So you kind of want to view in, close in, kind of middle out, and then far out, right? And so, 64 classifications for the daily and 32 for the weekly. And essentially, again, all Pi does is it counts the number of bars that has occurred, the total number that's occurred in each classification, and then it finds the percentage of time that it's either closed greater than it's open, or less than it's open, right? Very simple. Um, but highly effective information that we haven't seen anything else like this available on the market. um, and so we're really, really excited for this. Not just because you know the impact, that the direct impact that it could yield to a trader, or strategist or developer or whatever, but its application versatility, right? Any frequency, any market, any asset, any underlying strategic concept, strategic philosophy, methodology, it doesn't matter. Position hold, it doesn't matter. So it's very, very a fantastic tool for anyone's arsenal that's serious about really maximizing their efficiency, improving and perfecting their own craft as a trader, and helping to reduce subjectivity in whatever process that they currently have, right? And that is one, by far, one of the most, you know I always felt when I first started out trading, subjectivity was, you would see a lot of tools available, out, and in any analytic, but when it comes time to actually pull the trigger, it's quite subjective, right? Do you want to, are you waiting for this kind of setup or that kind of setup, or how are you going to, what's your actual threshold? What's your trigger, right? What's your trigger event for that? And that can be a little fuzzy, and that is fuzzy in almost all research tools. And so, it was, the priority here was to create something that wasn't, right? And, its output is, again, very, very simple. It may sound complex. It's really not. We're essentially just breaking the market down into, either 32, 64, or 128 different regimes. And then we're identifying what percentage of time it's closing up or it's closing down. And it's outputting that percentage to you. Very, very simple, right? Now, the model itself is a little more versatile in a sense that, because I wanted to create a model that could deliver more value in a sense from, how you wanted to apply it, how you wanted to integrate it. So I did include, some different options in how you want to, what different, paths you may want to kind of forge ahead. Whether it's more short-term trading, more longer-term trading, more trend, more reverting, etc. So we were really, really confident in not only that, but delivering it in this. What you see here is essentially the format that it'll come. Each chart will come with two models that's deactivated, just turned off. You just go and turn them on, just like I do here. Now, a long and a short for each, right? And then these uh, the settings here will be aligned. How you're classifying the market in the model will be how it's classifying in the indicator, right? That's a plug and play solution. Again, that's how our workspaces will come. That doesn't mean you have to use that, right? You can change these to whatever you want, right? You can change these to whatever you want. Um, you can play along with them, test them, and I invite you to do that, right? To watch the how-to video a few times, if you need to, and I even show you a testing sequence, like, hey, this is, even genetic optimization, how you use that. And so the product will be available for TradeStation and multi-charts. Um, and again, it comes with the models, the indicators that you see here, right? Long and short, bullish and bearish for each frequency, right? And then a model per side for each frequency, right? And this workspace is essentially what you see, right? And that is what we will deliver to you. So you receive 6 indicators, 6 models, right? And um, this workspace a workspace that'll already be pre-tuned. And then if you want to purchase additional pre-tuned workspaces, you can do that as well, right? And so again, for the first 100, I believe we're additional discount on that in the low 30% range. So fantastic deal, a lot of value there, that we're offering. Quite frankly, I've seen some um, far less, detailed and robust solutions offered for much, much, much higher. Um, and so, we're very, very confident in the value that they're offering, not just the product and the impact, the application versatility, but the actual cost of it, right? And so, but this is the intro price. So, that will most likely change after a few months. We're just bringing this product to market. And eventually, we'll also have a small monthly fee that's attached to that. That'll be optional for product updates. We'll also be upgrading our website to offer a forum, so people that will create a community of traders that use this product, and they can share different setups with each other. Different model inputs, different for different frequencies, different applications, how they integrated it into their methodology or that strategy, or how they're using it on their own. Um, so we want to create a community of people that are all benefiting, that are all extracting value from Pi and the other research tools that we also offer. And so let's see. You can go to Equity Sciences. I don't know why I did that. Mm, I supported protocol. Anyway, I guess the I guess my business partner is site is down at the moment, but we'll get that back up. So he's probably updating it as I speak. So um, anyway, so you can go to Equity Sciences. That'll probably be up by the end of the day. He's probably updating the site as I'm doing this webinar, but we'll have every product listed. So we have other products that come along with this. So we have the distance, right? So distance per classification. We have another research tool that has, a lot of different forms of analytics. So you can create custom uh, price characteristics um, per classification basis. So the research tool gives you a way to create different different characteristic profiles for each classification. And then in addition to that, we'll also include models that include those additional analytics. And then we also have an entry and exit targeting model that can be used. So you don't know that necessarily, let's say that, you know, um, this outputs 80% and it's meets your threshold, it meets your other, whatever your other strategic logic may be, if you have any other, right? Let's say you're just following these three outputs and each three meets your threshold criteria. You act, right? That's your triggering event. Okay, you act. Well, do you just want to buy at market? Do you want to buy at close limit, right? Well, the entry and exit targeting model uses classification to show what is the optimal targeting values for the current classification. Like, do you want something that's to help squeeze a little bit more efficiency out? So maybe it's previous close price minus 6 ticks, right, or 10 ticks, or 3.5 points, or whatever that might be, right? And that's all dynamic values. So, and technically it wouldn't be points or ticks based, it would be a percentage of downward pressure, of downward movement, or volatility or something. So everything that we use is dynamic and price and centered in price characteristics. So but you can visit, www.equitysciences.com. That would probably be available tomorrow. Um, and take a look at the different products that we offer. And again, right now we're offering SPY that is delivered. It's a plug and play, more plug and play type of workspace. But again, you don't have to use that. You're most welcome to customize however you want. It is at your discretion how you want to integrate this into whatever process, strategy, methodology that you currently feel like pursuing or do pursue. So, but that's it. That's pretty much the basics of Equity Science's Peak Insight Engine. Again, we do have the research tool, price distance model, and the entry and exit targeting products that will come along with that, that will accompany with that. And we think that those are good tools. Um, Additional bits of information to help someone extract more value from the market, right? A little bit more efficiency, to be a little bit more efficient in their process, right? To not just enter at market, and to just not exit at close limit, right? But maybe it's close plus, you know, uh, 13% of upward movement average, right? Or, buy at minus, 25% of downward movement, right? So there's a lot of ways to extract. You'd be surprised at, if you improve your entry and exit prices, like if you just improve your targeting values just by 3 to 4 ticks on your entries and 2 to 4 ticks on your exits, and especially when you start, when your trade frequency is pretty healthy, you would be very, very surprised at how quickly those little 2 to 4 ticks adds up. Those compound very, very quickly. And they also help it reduce a little risk as well. especially for concepts like if you're trading like a 15-minute bar, right? So let's say that you have, um, you have the intraday applied to a 15-minute. You also have another. You have two intraday charts pulled up. So let's say you have a 15-minute, a 60-minute, and maybe you even have a 120-minute, right, or a 240-minute. Then you have a daily. So you can create custom workspaces yourself, right? So you can have two or three intraday frequencies. You can have a larger intraday frequency. And what I mean by that is, anything over, 180 minutes, like 180 minutes to like 360 minutes. That's a larger intraday frequency. So you can have, two smaller frequencies, a 15-minute, a 20-minute. Let's say you want to trade binary options, right? For instance, you can change this to 20 minutes, and then, with many binary options, you just need to know direction, right? That's all you need to know. You're just betting, is it going to close higher than this price or lower than this price? And if you're doing 20 minutes, right, and you just place your options at the money essentially, right, around the current price, and then you use this. Well, I know, right? It's 70%. Okay, well, I'll only you know, then you can use this to trade options, binary options. There's so many different applications for this. It's remarkable, and its impact into your process will we believe that we hope that it would be equally remarkable. That's why we designed it. Again, I designed this for my personal use. This was something that I wanted to, a tool that was just for me, that would help me extract more value from the market, right? And my own processes that I wanted on a discretionary basis. Now, obviously, we mainly pursue quantitative models here, but I started back in the day discretionary trading, and a part of me misses it. Like I like it, and I like that feeling of competition, and seeing if I could still do things. And so I wanted to kind of get back into it, and this is kind of what came out of that. And so, but I do feel like, you know, um, it's a good product to offer, even though that we're kind of opening ourselves up by selling it. And not, leasing it in a structure to where, but it is what it is. We're delivering a lot of value to our clients, and that's important as well, not just in, um, impact or cost, but also in knowledge and how they learn, how they grow, in this space. And so I think that's also an important thing. From those who have found obtainment in a space, because it's hard, it's very challenging, and people need all the help they can do, all the help they can get. So, but anyway, so if you have any questions, feel free to reach out, Robert at optimizedtrading.com. He'll be more than happy to help you with any questions that you may have. The website's obviously, it's probably down right now. He's probably updating it as as I speak. But that's it. If you have any questions, it's almost time. But David, I'm ready to rock.
All right, thanks, Brian. I did send Robert an email while you were talking about that, so
Okay.
hopefully that can get fixed quickly for everyone. So, um, you have a few minutes left. If anyone has any questions or anyone has any.
Yeah, what I could do is I could show someone our other products. We do have
Sure.
other products. We do have other products, and these have been developed for a long, long time now. SPY, or equity index quantitative models. These have out of sample going back to like 2019 to around the third quarter 2019, and the beginning to the middle of the fourth quarter of 2019. So they have pretty significant, out of sample, data. Um, so here's SPY. Here is the deviation. Here's the open position, as you can see. And again, this is simulated, right? But right? And here's Q, QQQ. And all of these start with 100K initial investment, and I do that for simplicity purposes. You technically you don't you don't need that amount to deploy these, but for for testing purposes, I always use 100K because it's very simple. Um, and you can see with SPY, like for instance, we underperformed, a little last year, but the difference between our products is there's not these massive periods between new equity highs. Like for instance, 2020, the market was pretty much flat with a massive COVID volatility. We gained 21%, and then 2022, the market had this massive downward movement, a more cyclical movement, and we were up 22%. So you can see there's not these massive drawdowns or these massive periods between new equity highs. And again, one reason for that again is healthy trade frequency, and you'll see that as a commonality with every product. But there's Q's, QQQ, there's DIA, which is Dow Jones Industrial, right? And there's IWM, which is the Russell. All right, let's see, periodical. Yeah, period. Yeah. So, um, we and again, these are, the framework for these of, you know, pretty pretty substantial about a sample by this point. But these are full blown, air quotes here, quantitative models, with more adaptive exit logic and allocation, independent allocation module and all that. So it's not just an entry vehicle like with what Pi is, right? But these are quantitative models that we offer as a signal service. And so if you are interested in those, you can also speak with Rob. And we're also working with, we're trying to work with a few providers to offer these um, solutions uh, at a RIA or robo-advisor to deliver these in an automated format. So more hands-off for the client, so it can be deployed in a more automated structure instead of a signal service, right? So we are currently working on exploring those strategic partnerships. And so if that is of interest, please let us know, because the more people that we have, the more paths that we can pursue there to gain more partnerships and have the right connection there for you, whatever your goal may be, whether it be signal service and or more of an automated type of deployment. But that is it.